Most traders use Bollinger Bands the same way. Price touches the upper band and it's overbought, so they look for sells. If it touches the lower band, it's oversold, so they look for buys. Or some people wait for price to close outside the band and then trade the breakout. But here's the problem. In live markets, price doesn't always respect these bands. Sometimes it rides the upper band for 15 candles in a row, and you keep thinking it's going to come back down, but it doesn't. Other times, it dips outside the lower band, then shoots right back in, triggering the stop losses of anyone who chased the move. The bands respond to volatility, but they also respond to noise, and that makes it hard to know if a move is real or just noise. But what if you could get the same volatility signals with none of the noise? That's exactly what the Natariah smooth Bollinger Bands do. They take the exact same foundation, price averages, and standard deviation, but then they apply one powerful upgrade, statistical smoothing, and the result is a clean, stable band that filters the noise without lagging behind. And just so you know, this indicator doesn't repaint. What you see on the chart is what you get. No redrawing, even if you're trading fast intraday moves. In this video, we'll break down exactly how it works and how you can use this on your own chart today. Let's get into it. At its core, Bollinger Bands are pretty simple. They measure volatility. You take a moving average, usually over a set period like 20 candles, and then you plot two lines around it, one above, one below. The upper line is the average plus a few standard deviations, and the lower line is the average minus those same standard deviations. So when price pushes outside those bands, the logic is simple. This isn't normal behavior. It might be exhaustion, it might be a breakout, but either way, it's something worth noticing. Now here's the catch. Those bands are based on raw price movement. Every tiny little candle movement affects them. If you're trading in low volume or sideways markets, it gets choppy fast. You start seeing signals that don't mean much. This is where the Natariah smoothing comes in. Rather than just using a basic moving average or exponential smoothing, it uses a statistical technique called the Natariah Watson estimator. Think of it like this. Imagine you're trying to figure out the market's mood, but instead of caring about every candle from the past week equally, you give more weight to the most recent candles. Sure, you still look at the older ones, but what matters most is the recent candles. And that's why the bands look so clean on the chart. They're still accurate to price, and they're not lagging, but they're not jumping around every time one candle twitches. And in fast markets, that's a huge edge. Now you might think this smoother curve is just for aesthetics, but the real advantage kicks in when you start using it to track volatility, especially during consolidations or trend transitions. But first, you need to know how to actually set it up. When you load the indicator, you'll see a few settings. The most important one is the smoothing factor. This setting controls how smooth the bands appear. If you set it lower, the bands follow price more closely, but they'll also react more to small movements. If you raise it, the bands smooth out even more, but they might start to lag a little. It's a balance. You're choosing how much noise you want to see versus how sensitive the bands are. There's also an option called repaint smoothing. It's turned off by default, but if you switch it on, the bands redraw themselves with each candle. It will help you see transitions more smoothly while price is moving. But even when you set the smoothing high, the Natariah bands still stay surprisingly close to price. Here's why that matters. In this chart, all the bands are built with similar offsets to match the original Bollinger Band shape. The blue line is the classic Bollinger with no smoothing at all. The orange line uses SMA smoothing. The purple is smoothed with EMA. And the red line is the Natariah smoothing version with a bandwidth setting of 6. Now, you'll notice something right away. The Natariah one is much smoother than the others, but it still fits price's movement just as closely. Sure, you could increase the EMA or SMA periods to smooth them out, but then they start drifting further from the real price action. You lose accuracy just to clean up the noise. That's the advantage of the Natariah smoothing. You get clean, stable bands without lagging behind or sliding away from price. And here's something you need to keep in mind. This tool isn't designed to be a complete trading system. It doesn't give buy or sell signals on its own. What it does give you is clarity, a clean view of how stretched price is and how volatile the market really is without feeding you false signals every few minutes. It's like cleaning your windshield. Now you can actually see the road. If you want to start using this indicator, click the link in the description. It's completely free. That's all for today's video. If you enjoyed it, please leave a like, comment, and subscribe. Also, make sure to join our free Discord where we share more trading indicators, strategies, and host live trading sessions. Thanks for watching, and until next time.